Welcome back to the Deep Dive. Today, we're taking a single, pretty dense research report and basically pulling out all the critical intelligence you need fast. Our focus, it's the iGaming landscape in Benin, West Africa. It's changing quickly, but, well, it's also facing some pretty profound challenges. Now, this intelligence, where's it from? Well, we are the Gambling Databases research team. We're dedicated to delivering these really in-depth, data-driven analyses of the global iGaming landscape. And for every country, like this deep dive into Benin, we look into, the local regulations, the taxes, what the player experience is like, operator conditions, emerging trends, all that stuff. Our goal is always to give you a clear, sort of unique understanding of what makes each market tick. Benin, it's a fascinating place for potential investors. You've got a relatively small population, maybe 14.8 million people, and internet penetration still quite low, 33.8%. But, and this is the kicker, the government has recently signaled a huge formalization of the online sector, so we need to figure exactly what they did and, crucially, uncover what looks like the single biggest challenge.
The one thing that could make the whole idea of a licensed market there just, economically non-viable.
Yeah, what's really striking is just the sheer speed of the regulatory moves lately. It signals pretty clearly that the government wants to capture that digital revenue. And this all sort of culminated in Law Number 2024-34, enacted back in January 2025. That law formally set up a tax structure for online gambling, which is interesting because, they did that whether or not they've actually finalized how to license it. It feels like a clear move to just maximize revenue extraction right from the start.
Okay, let's unpack this properly from the beginning. So traditionally, land-based stuff, casinos, lotteries, betting shops, that's been legal since the 2002 Gaming Act, yeah? And the regulator for all that is the National Lottery Authority, LNAB.
That's right. And LNAB, that's a key piece of context here. They're the traditional regulator, mainly focused on, brick and mortar operations. And now the government is essentially pushing them into the digital space, which is, it's complicated. For years, online gambling just existed in this, total gray area.
Yeah.
The 2002 Act, it just completely ignored the internet, didn't mention it. But that gray area is definitely dissolving now. The 2024 finance law formally acknowledged the sector. And even before that, back in March 2023, the government announced plans for a comprehensive digital monitoring system. The intent seems pretty clear. They want the tools to track online betting, ensure compliance, and, theoretically block the illegal operators.
Right, and here's where it gets really interesting for anyone watching, because that intent met reality in January 2025 when the new taxes kicked in. The land-based tax seems, fairly moderate. What's that rate again?
For land-based, it's a pretty standard 10% on turnover or wagering, kind of typical for the region. But the online gambling tax, that's where Benin really becomes an outlier. They've slapped a, frankly, severe 25% tax on winnings.
Oh, hang on. 25% on winnings. That sounds incredibly high. How are licensed operators even supposed to manage that? Is it up to them to collect it?
It is. It's entirely the operator's responsibility to withhold that 25% and then remit it to the government.
Wow.
And you can immediately see the problem, right? That requirement creates a huge, severe competitive disadvantage. Think about it. An unlicensed offshore operator, they don't collect this tax.
Yeah.
At all. So they instantly offer a 25% better return to the player, just like that.
It's an absolute killer.
Yeah.
You're asking a licensed business to basically make its own product 25% worse than the illegal competition from day one. Is there any strategic thinking here? Maybe it's designed to keep the big international players out for a bit, protect local land-based guys?
That's a fair question. Could it be protectionist? But the numbers, when you dig into them, they just suggest it's prohibitive for anyone trying to run a proper commercial operation. If you connect this to the bigger picture, like operator viability, once you layer that 25% player winnings tax with the standard corporate income tax, which is 30% on net profits in Benin, the report calculates the total effective tax rate can easily top 50%, maybe even 60% of revenue. The source material literally calls this prohibitive for most operators.
Okay, so a brutal tax structure is already in place. Now, if an operator was brave enough, or maybe crazy enough to try and enter, what's the deal with actually getting licensed? Is an online license even available?
Nope. They're stuck. Stuck in what the report calls a profound licensing limbo. Formal licenses are only really available for land-based operations right now. You can pay $50,000 to $75,000 for sports betting, over $100,000 for a casino license. But, crucially, there is no formal online licensing framework available yet. None. So if you want to operate online legally, you just have to wait. Indefinitely. Wait for the government to actually move from just taxing it to properly regulating and licensing it.
Wow. taxed before you can even be licensed. That's
Yeah.
quite the situation. Okay, so if the regulators do eventually sort out the paperwork, let's talk about the market itself. Who would operators be targeting? What's the actual potential on the ground? Demographics first.
Right. The demographics, that's kind of the long-term carrot, I suppose. Total population, like you said, 14.8 million. But the median age is incredibly young, just 18 years old, which means you've got, what, 5.3 million people in that core 15 to 34 age group? That's a massive future pool of digital natives.
Okay, that youth is the potential runway, definitely. But what about the immediate economic picture? Can they actually afford to gamble much?
That's the immediate hurdle, a really profound constraint on spending power. The GDP per capita is only around 4,485 US dollars, and the poverty rate, it's high, hovering around 36.2%.
Right, so we're talking micro stakes here, bets measured in cents, probably not dollars. Operators would need massive volume, not high rollers.
Exactly. It absolutely translates into needing a micro-stakes environment. Any operator hoping to succeed has to build a platform based on high-volume, really low-margin transactions. Because the customer lifetime value, the report assesses it as, frankly, minimal.
Okay, let's shift to infrastructure.
Yeah.
We know overall internet access is low, but the story's all about mobile, isn't it?
Completely. It is entirely mobile first. Mobile penetration is actually incredibly high, over 100%, 106.4%. Multiple SIMs, So operators just cannot afford to build platforms that chew up data or need fancy software. Everything must be optimized for budget Android devices. They dominate the market there. The silver lining, maybe, is network quality. It's actually decent. 4G coverage hits about 88% of the population, and mobile internet speeds, interestingly, are faster on average 30.56 Mbps median than fixed broadband, which is only around 24 Mbps.
Okay, mobile-first, low-spec Androids. Got it. Now, payments. This is often the make-or-break factor in markets like this. What's the situation? Is there a bottleneck?
The payment system is probably the biggest single point of failure risk, yeah. Bank account penetration, very low, under 30%. So digital payments, which have about 37.9% adoption, are completely dominated by mobile money. We're talking basically two players, MTN Mobile Money and Move Money. That's it. Credit card use, forget it. Negligible. And the report really hammers this home. Operators must achieve deep, robust, reliable integration with those two specific mobile money platforms. If those integrations fail or are unreliable, the whole business pretty much fails. Other payment methods are just not recommended or have tiny adoption.
And when players do manage to get money into the system via mobile money, what are they betting on? What are the preferences?
Sports betting is the main thing, particularly European football leagues, Premier League, La Liga, that sort of thing. They're looking for that low-cost fun, maybe the chance of a decent payout. And the traditional national lottery, run by LoNAB, that remains popular too.
Okay, let's try and pull this all together. We've got a young, very mobile population, but with really low spending power. They're relying almost entirely on just two payment systems. And they're governed by this potentially crushing 50-60% effective tax rate. And there isn't even a formal licensing process available yet for online operators. So what does the research team conclude? Is this market actually viable?
Yeah, this is where the hard numbers from the team really provide that final kind of inescapable reality check. Let's look at what the report calls the market size paradox. The government itself is only projecting about 25 million US dollars in annual tax revenue, and that's from the entire gambling sector, land-based included.
25 million in tax. That implies a total wagering market size of...
Exactly. Based on that tax projection, the report estimates the total annual wagering market is only somewhere between, say, $100 million and maybe $250 million, max. And the key finding here is that's just far too small. Far too small to support multiple licensed operations, especially when you factor in the costs. Because the costs aren't trivial, even for a small market entry. Initial investment is pegged somewhere between $217,000 and $685,000. And then you've got substantial annual operating costs, think $408,000 up to nearly $950,000 a year. So you combine those high fixed costs with the minimal market size and that crushing effective tax rate. Profitable operation becomes nearly impossible. That's the direct quote.
Nearly impossible. That's about as stark as it gets. So what was the final rating? The overall market attractiveness score from the research team?
It's low, a 4.7 out of 10, which classifies Benin as an emerging market with significant challenges. And the final verdict from the Gambling Databases research team, it's unambiguous for most commercial operators: avoid. The conclusion is the economics just flat out don't work, mainly because of that combination of the 25% player tax and the extremely low average player value.
Okay, avoid. But let's say an operator had to enter, maybe some complex strategic reason, part of a bigger regional play.
Yeah.
What are the absolute must-haves, the non-negotiables for even attempting it?
Right. If you had to try. Number 1, mandatory French language support. Everything has to be in French. Number 2, mobile-first optimization, specifically built for those low-end budget Android devices. No frills. And number 3, deep, absolutely rock-solid integration with MTN Mobile Money and Move Mobile Money. That has to work flawlessly. But even if you nail those 3 things, you're still facing huge headwinds. The regulatory uncertainty, that killer tax, and intense competition from untaxed, unlicensed operators who can always undercut you on price, those challenges are nearly insurmountable.
This whole deep dive, it really reveals a fundamental paradox, doesn't it? The government of Benin formally acknowledged online gambling exists by hitting player winnings with a punitive tax before they even set up a proper way to license operators. They essentially made the licensed business model look non-viable before it could even officially start.
It really does raise a big question, one for you listening to consider. When an emerging market slams down a tax like this, 25% on winnings before the actual regulations are finalized, does that show a real commitment to building a sustainable, competitive, licensed industry? Or is it purely about maximizing revenue extraction, regardless of the consequences for the market itself? It's a key tension, something we see playing out in different ways globally, and definitely something potential investors need to watch very, very closely.
Absolutely. A truly fascinating market to analyze, but clearly a very challenging one. Thank you for joining us for this deep dive into the complex West African market of Benin. And remember, for the full text of this report and analyses of many other countries, including all the detailed financial breakdowns and risk assessments, just visit our website at gamblingdatabases.com. We'll see you next time on The Deep Dive.